Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the medium time frame bullish scenario where we're looking for an impulse to the upside, where we're waiting for a wave 4 to form and finish before then continuation to the upside in a wave 5. Common target area for a wave 4 is between the 236 and the 05 Fibonacci, taken from the low of 2 to the current high that we have over here, giving you a target between 35.1k and 32k. The most common target area for a wave 4, however, is between the 382 and the 05, which is between 33.4k and 32k, which also includes the key level that you see on my chart over here. And the key level is the beginning of this 1 hour gap. It is the high of this 1 hour gap, and as you've been following my content over the past couple of weeks, you probably know that gaps tend to be very nicely respected in trending environments. So what we are looking for is price to then hit this gap and then move away from the gap towards the upside. The moment price is going to close candles inside the gap, it increases the probabilities to fill the gap and move to lower prices. Now the 0.5 Fibonacci is still a little bit below the key level, so that is absolutely fine. Having candles close here is no problem. Wicking below, still closing on the 05 is also no problem for then the low of a 4 and the move up for a wave 5. But we don't like to see high time frame candles close below the 05 or hit the 0.618, which is an invalidation for a wave 4. If we look at the medium time frame bearish scenario, then we are looking for 5 waves that are already finished. The most common target area for wave 5 over here between the 1 and the 0.618 is currently nicely respected. Of course, there is more upside to go all the way to 40.4k, but the minimum target is 36.7k, which has been reached. In this particular scenario, you do want to see a bigger retracement to the downside in the bullish scenario, because here you're then looking for a wave 1, 2, 1, 2 continuation to the upside. In the bearish scenario, it would then be an A, B and a wave C, but preferably for a wave C, you will find more upside, as I explained in my cycle, macro and high time frame video that I post every Sunday, and the playlist is on my YouTube channel. Now over here, we're then looking in the bullish scenario for a wave 2 and continuation to the upside in a bigger wave 3. And the common target area for a wave 2 is a Fibonacci pulled from the low of wave 1 to the high of wave 5, toggle on the wave 2 targets, and then we're going to be looking for the 0.5 to the 786 area, which gives you a target between 31.4k and all the way down here at 27.6k. So even if price reaches the 786, we're still in bullish market structure for a potential bigger wave 3 towards the upside. The 0.382 and the 886 are rare targets for a wave 2, and therefore preferably we're going to deep inside the 05 to 786 area. If we now go to the lower time frames and I zoom in to the 50-minute over here, or actually the 30-minute preferably, then we can go through the scenarios relatively quickly. And I also wrote some stuff down, so you can also stop the video shortly and read through what I wrote over here. The pictures that I show here are going to be the scenarios that are coming up right now. First scenario here is the bullish scenario, where we were looking for, hey, potentially a 3-wave structure to the downside, right? And when I made the video in the morning, price was over here, all good, all nice, but I spoke about the invalidation as well. Now for an A, B, C and a 3, 3 and then a 5-wave structure to the downside, we were then looking for a 5-wave structure in a 1, 2, 3, 4 and then a wave 5, but a wave 4 should not hit the 0.618, which happened over here, which invalidates an ABC because that is not what you like to see. So we can remove this one from the chart and this as well. Now then we are left with a WXY scenario, which then has to be a double zigzag. Now double zigzags are not that common, but my main issue with a potential double zigzag here, and then an ABCW, then you have X and another ABC to the downside in a wave Y, is the zigzag in wave W, because if we are looking for a 535 in W, yeah, you could get a 5-waver in here, but this looks very 3-wavy and not 5-wavy, which for me also lowers the probabilities of this being a double zigzag to the downside. Besides, if we are looking at the low of wave Y and we're looking for a move towards the upside, then what you want to see is a 5-wave structure, 1, 2, 3, 4, and eventually a wave 5 to the upside. But if you go to the 3-minute time frame, then you could say, okay, we maybe have like a 1, 2, 1, 2, 3, 4, 5, 4, 5. It's not clear here the end for a bullish scenario, so that's not really what you like to see in a bullish environment. Now, if you take a fib from the low to the high over here, and we toggle on the wave 2 deeper targets, then now you can also see that the 886 has been hit. So even if this would be the low of a wave Y, and this is your wave 1, 2, and you're going to be looking for a move up in a wave 3, then as I've just mentioned on the medium time frame, for a wave 2, the 886 is a rare target. It is more common for a wave B or a wave X, meaning that any move to the upside here has a higher probability of being a wave C or a wave Y, which in turn increases probabilities to then take the low over here, which then also increases probabilities to just take the double bottom that we have here anyway. Now, if we then look at this triangle scenario, then for a triangle, it is too early to call. As explained in the previous video, I do like to wait for at least wave D to be in, because until D is in and we actually start to move down for E, there's many different scenarios that have a higher probability than a triangle. But I do at least like to mention this once more, but also the proportions of A and B are off. Like wave A is incredibly short, wave B is long, and wave C is very long as well, which lowers the probabilities of this particular scenario. Now, if we do get a move to the upside here and then potentially still an ABC 535, possibly we can be thinking about a D, but again, it's way too early to call, and the fact price hit the 886 generally increases probabilities to take the low. If we then look at this bearish scenario over here, then we are looking for a wave 1 or A, 2 or B, and then a move down in a wave C or a wave 3. The problem here with this particular scenario is also written on the chart, and that is that 2 or B is incredibly long compared to wave 1 or wave A. 46 times longer than wave 1 or A, which is unheard of, really lowering the probabilities for this scenario as well, where you're going to be looking for a move to the downside impulsively in a wave C or a wave 3, with the wave C target between 35.1 and 34.5k, and a wave 3 usually minimum target at 33.6k. If we then look at the second bearish scenario, however, then we are looking for a build-up of 1-2s to the downside. Now, it's quite interesting that we did not have any bigger bearish CVD divergences between the 1-2s over here. If this is a wave 1 and a wave 2 and then another 1-2, we didn't really see any bearish CVD divergences, bigger ones. But throughout this move to the downside over here, we did start to see bearish CVD divergences coming in. Now, in this scenario, we're then looking for, again, a 1-2 and then 1-2 continuation to the downside, or an A, B, and then a bigger wave C to the downside. But if we look at a wave C over here, then this being a wave C is a very long wave C to an compared to a very small wave A, right? Yes, wave C tends to be commonly longer than a wave A, but this again is very out of proportion. So this is not really what you like to see. And in the triple 1-2 scenario, or even quadruple 1-2 scenario, as you can see, you have a 1-2, 1-2, 1-2, 1-2, and you just have a buildup of 1-2s and eventually expect an explosion towards the downside. Preferably in a buildup of 1-2s, you are seeing a diagonal structure in a 1-2, 1-2, 1-2, and then a big push to the upside, where each wave 1 takes the high or the low in the bearish scenario, by the way. So you then have a contracting diagonal like this, 1-2, 1-2, 1-2, move down, where each wave 1 takes the low of the previous wave 1, and preferably is also shorter in time and price. Now, as you can see, it's clearly not a diagonal shape from the high over here. If I do this, right, very simply, it's even like a contracting diagonal like this, but that doesn't count, right? Because you want to see the wave 1s actually go below the previous wave 1. So it's not a great looking multiple 1-2 scenario, but it still has potential, because it's not a must, but it is a, yeah, it can happen, right? That it forms like this. Now, if we look at the range over here, then price moved to the upside. And what's interesting here is that it moved to the upside and it filled this little 15-minute gap to the T over here, hitting the high very nicely indeed, for then a move towards the downside, where now we are back at the support area over here The white box that you can see is a daily gap, which we didn't fill yet. So the bottom of this gap is basically the double bottom as well with the candles. So that's candle number 1, candle number 2. So it's interesting to observe the reaction at the double bottom. But if that doesn't hold, then we of course are looking for price to move to lower targets. And in this scenario, we're then looking for the blue box, 35.2 to 35.4K, or we're looking for even lower, right? 34.3, 35.5. Over here, another one, 33.8 to 33.9. So it really depends on how price then moves locally. We also have the CVD divergences here. Now, throughout this move to the downside, I mentioned it earlier, we constantly had bearish CVD divergences building. So we don't have any bigger ones, but we have a buildup of smaller ones over here. There is absorption going on of market longs, giving pressure towards the downside, increasing the probabilities, especially after I saw this morning here, giving probabilities for a move towards the downside. And here you can see it a lot better, actually on the 5-minute chart, where yes, you have bullish CVD here, higher low in price, and then we also had a lower low on blue as well as on yellow, but then more locally on the 5-minute here, lower high on price, higher high on the CVD. So there's again bearish CVD divergences building locally, and now of course price here hit the 886 taken from the low to the high, which then again increases probabilities for price to take this low and downside to come, right? We have the double bottom just below. Interesting to observe the reaction. If no reaction, next one down here, right? Now we do have news as well coming today, so make sure you trade safe at 2:30 p.m. Central European Time. That's 1.5 hours after this video is online. The CPI data over here, no idea what it is exactly, but it is red, so that means volatility most of the time. So make sure you trade safe as volatility might kick in. And if we then finally look at the probabilities of the different scenarios, then on the medium time frame, on the 12-hour time frame, probabilities are still higher for the bullish scenario, where we're looking for a wave 4 to finish before then a wave 5 to the upside. But here on the micro, the probabilities are increasing and are higher at the moment for bearish scenarios, where we're going to take at least this low, the double bottom over here. And I personally like to check it level by level. So probabilities are bearish at the moment. Take this low is currently the highest probability scenario. If there's no reaction at the double bottom, then simply going to be looking for this box over here. If we reach this box and then start to create more bearish local CVD divergences, or we just push through with the news coming up, then we're simply looking for lower prices. And don't forget about that key level at 32.5K. But this is currently the probabilities based on what we saw over here. So in the morning, there was enough potential for a move to the upside. But after price hit the golden pocket over here, invalidating a potential wave C and then an ABC flat to the downside. Also price retracing to the 886 over here. Yeah, probabilities are not looking good for a move up. We are looking for these lows to be taken, and we take it step by step. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which for me is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.